Welcome to another amazing episode of Raising Private Money. I'm Jay Conner, your host, also known as the Private Money Authority. And today I've got an amazing guest to introduce to you. We're going to be talking about raising private money. This is the show, the podcast, where we talk about raising private money without even having to ask for money. Well, my guest today, he's raised, you might as well say, $5 million in private money from his investors so far. With over a decade of experience, he has built an amazing portfolio of multifamily properties up in Connecticut and down in the Southeast United States as well. Well, his history, his original story, his origin began for, well, more than 24 years. He worked for Silicon Valley startups, honing his skills on the go-go tech world. And it wasn't until 2011 that he bought his very first rental property. Well, in 2018, he left that rat race to focus entirely on growing his company, which is called, or one of his companies, which is called Clark Street Capital. Well, he's also an expert on crowdfunding. So we're going to dive deep on how in the world do you raise money by using the platform of crowdfunding. Well, in just a moment, you're going to meet my friend and my guest, Mr. Ed Mathews, right after this.
If you're a real estate investor and are wondering how to raise and leverage private money to make more profit on every deal, then you're in the right place. On Raising Private Money, we'll speak with new and seasoned investors to dissect their deals and extract the best tips and strategies to help you get the money, because the money comes first. Now here's your host, Jay Conner.
Well, welcome to the show, Ed.
It's good to see you, Jay. How are you?
I'm doing fantastic. Good to see you again. Thank you for having me on your podcast
My
a
pleasure.
few months ago. And so it's great to have you here on Raising Private Money. And you for sure have got a lot of experience in that. So before we dive into how you've gone about raising private money, and by the way, we have two audiences that listen to this podcast. We have those real estate investors that are looking to raise private money for their real estate deals or raise more private money. Then, of course, we have another part of our audience that is all interested in passive investing, wants to be in real estate, but they don't want to go out and be an operator and negotiate deals. They just want to sit back and collect nice returns. And so you'll be able to speak to that as well. But first, tell our audience, Ed, how did you go from that Silicon Valley space and tech world
Yeah.
to segue over to real estate investing?
So I had always had a bee in my bonnet for real estate, and starting from swinging a hammer and being a gopher on construction sites when I was a teenager. At that point, I wanted to build houses, and then life took over. I found and married the love of my life, and we had a family, and that required me to start using my college education. So I went and got a job, and then another job and another job, and realized, man, there is just no way I'm going to get where I want to take our family on a W-2. And so I was starting to explore opportunity side hustles. They weren't called that back then in the early 2000s. They were just called, moonlighting or whatever you wanted to refer to it as. And I had a consulting firm that I had for about 4 years with a couple of partners. And then in 2008, a really good friend of mine gave me the Purple Bible, the Rich Dad, Poor Dad. And it fundamentally changed the way I viewed not only my current, but future state. And so I was hooked and re-engaged my real estate desires. And quite frankly, it took me about 3 years to ratchet up the courage to actually pull the trigger on a deal. And there's a story behind that which I'm happy to share. But the the process to get there was a long one. But along the way, I was reading as many books as I possibly could, and just trying to learn. And meanwhile, I was working 80 hours a week, flying all over the country, and in some cases all over the world to sling software and services for the companies I was working for. And over the course of time, we acquired a 4-unit, and I'd flip a couple houses and buy another multi and flip a couple more and buy a multi and rinse and repeat, rinse and repeat. We did that for, gosh, better part of 7 years. And in 2017, I was standing in a large conference room with about 2,000 of my colleagues at a company called DocuSign. And the chairman, Keith Kroc, who is, kind of one of the pantheon of entrepreneurs in that world, he is certainly one of the, true success stories. Multi-billionaire, lives in, actually his house is the old Russian embassy in San Francisco, just to give you an idea of who he is and what he's
Wow.
accomplished. And I was standing there, and I was standing with my team and my colleagues, and I was listening to Keith do what I affectionately refer to as his laser light show, which is, the man oozes charisma, and he walks in the room and he owns the room. And, he was talking about what the future looked like. And I was sitting there clapping and thinking, yeah, he's right. This is exactly the right way to take the company. I totally buy in, but I just can't do it anymore. And, at that point I was traveling, 150 nights a year plus. And it was, at that point where I had a long conversation with my wife, Patricia, and we looked at the real estate portfolio and looked at what we were making in the W-2 world and realized that the real estate had eclipsed what I was making in corporate America. And right after the holidays, I gave them 30 days notice and resigned. And I've been doing this full time since February 2nd, 2018.
Good for you. Good
Yeah,
for you,
thank you.
Ed. You mentioned something a moment ago, and that is you mentioned the word courage on pulling the trigger on the first deal. And I'm sure we have some of our audience members here listening to the show that haven't done their first real estate deal yet,
Right.
and they are dealing with this thing that they perceive to be fear. So, how did you get the courage to move forward and do that first deal?
So let's talk about fear first, right? If your hand doesn't shake when you sign that purchase and the closing documents and the mortgage documents and all that, if you aren't nervous, if you aren't scared to do that, you fail to understand the magnitude of the decision and responsibilities you're taking on. And I say that because it's perfectly healthy and perfectly normal to be nervous. You're supposed to be. It's a lot of responsibility. It's a lot of responsibility to your investors. It's a lot of responsibility to the residents who are going to live in your buildings. And it's a lot of responsibility for the folks that work for you and your family. Every single person on that list is counting on you to do what you say you're going to do. And it's, there are, even if the project works flawlessly, there are plenty of nights where you're staring at the ceiling at 3 a.m. And, sometimes it's with excitement, but sometimes it's with a little bit of trepidation, and it's totally normal. So once you recognize that you're supposed to be scared, then it becomes courage, right? And you act even though you're scared. And so, because for me, it went from being gosh, I wish I could do this, to, I don't want to do my day job anymore, so I have to do this. This is something that must happen. And I had come to the realization, in reading Kiyosaki's book, that the only way I was going to achieve the goals that I wanted to achieve for me and my wife and my girls was to break out on my own and build a company. And so that is, and real estate was my vehicle, and so that was what we did. Now the story is an interesting one. So we moved from the Boston area back to Connecticut back in '08. And my wife and I both grew up here, and it was an opportunity with our kids getting a little bit older. At that point, our oldest was going to kindergarten, and we had an 18-month-old. And the opportunity really was about moving back towards family, right? So my mom lives here, my in-laws all lived here, and so we wanted our kids to know their family, and so that was part of it. Um, so I used that span from '08 to 2011. And if you recall, there was a lot of proverbial blood in the street in terms of the stock market, in terms of the real estate market. And, those are the great opportunities that present, when there's fear and angst in the market, that's when you should be buying, right? And so I wasted 3 years being afraid, but then finally I met a woman broker by the name of Amy Rio. And Amy, at that point, she was probably a 4 or 5 agent office here in Central Connecticut. And she took me around, bless her heart, to about, I don't know, 20, 22, 23 properties. And I found an excuse not to buy every single one of them. And finally, and it was silly stuff, right? Oh, this one needs windows. I don't want to deal with that. Oh, this one needs a roof. I don't want to deal with that. Oh, this one's blue. I want a white one, right? I mean, it was just silly stuff. And she finally found a 4-unit on a company on a street, Clark Street, as a matter of fact, which is why I named the company this. And we walked the property. It was a 4-unit building. The person who owned it had gotten in over their head, ran out of money, and handed the building back to the bank. And she got me in basically day one, and we were able to move on it. But the funny part about it was we were coming out to the back parking lot, and I was already cranking up the excuses as to why I wasn't going to buy this. And she listened to me and she nodded and said, okay, well, I hear you. And as I'm talking, I could see her take out a pen and take out a piece of paper and put the paper on the hood of my truck. And she's nodding and nodding. And she finally stopped me. She goes, look, Ed, I like you and I appreciate the opportunity to work with you, but I've shown you almost 24 properties. And this one is by far the best deal I've shown you. And if you don't buy this, 2 things are going to happen. A, I'm going to buy it. And B, I'm going to kill you. Never call me again, right? And now I'm, a pretty big guy. I'm 6'4" plus, and she's generously 5'2". So I'm well over a foot taller than this person. And she scared the living daylights out of me. She was like, sign the contract. Don't be an idiot, right? And so I daintily took the pen from her, and my hand shook, and I signed that contract. And I said, yes, ma'am. And it was the best decision I ever made. Thank you, Amy, wherever you are, because right now she is one of, if not the largest broker here in the state of Connecticut, and doing very well. She has several hundred agents working for her now. So she's really doing well, and couldn't happen to a nicer person. And I'm eternally grateful. Every once in a while, she even returns my phone calls.
So in other words, you're saying the way you get courage to take action is you get somebody to pour a great big dose. Yeah. Pour a great big dose of fear of loss on top of you, right?
Well, I think that's one way. I mean, so I believe in a lot of the teaching of Tony Robbins, and he talks about pain versus pleasure, right? And so, it's one of the 2 things has to well up to the point where it becomes a must. And either it's such a great opportunity that it'll create so much pleasure that you just can't pass it up, or the alternative is you are so beaten down or so in a state of pain that you have to do something different because you just can't take it anymore. And I would say that moment with Amy in the back parking lot was probably a smattering of both pain and pleasure. I saw the opportunity. I jumped at it because, it was a 4-unit for $99,000, and it was cash flow positive within 6 weeks of us owning it. And it was cash flow positive until the day we sold it a little earlier this year. And, but there was pain there too, in that I knew I needed to do something different. I knew I couldn't sit in a W-2 job for 40 years, get my gold watch and go home, because that doesn't exist anymore.
Yeah. One of the coaches that works with me and helps coach my real estate investing students, her name is Crystal. And at the end of her emails, her signature, her byline says, life begins at the end of your comfort zone.
Yes.
Life begins
yeah.
at the end of your comfort zone.
I was talking to my friend Chris Morin about that not that long ago, and he was saying, if you're not uncomfortable, what he said was, if you're uncomfortable, that means you're growing, and that's a good thing.
That's right. The successful learn to be comfortable with being uncomfortable. Now, something you mentioned a moment ago,
sure,
Ed, you talked about, you made this decision, you made the commitment to get into real estate investing, and your family is counting on you. Your family is counting on you to have the integrity to do what you say you're going to do.
Right.
With that in mind, as you have gone about raising millions of dollars in private money from private lenders to invest in your deals,
Mhm.
how have you gone about instilling trust, credibility, to where they believe that you are going to perform? Because, what I've observed over the years, I've been raising private money since 2009, got 47 private lenders. And what I have discovered and observed is that my private lenders, my private investors, whatever you want to call them, that are funding the deals, they're really not investing in the deals. They're really investing in you,
Correct.
the operator.
Couldn't
How do
agree more.
you instill that, that belief that they really trust you to perform?
So I think part of it, a huge part of it, is that I come at a relationship, whether it's existing or new, from a place of service, right? And so, my job there is the personal relationship, which obviously comes over time, but the professional one really comes from understanding where the human being is in front of you in terms of their journey, where they are and where they're trying to get. And if you have a solution that will help them move the ball down the field, so to speak, then great, and provide that to them. So I use service as a way of building relationships, and here's what I mean by that. So first off, if I have an investor who's looking to invest in real estate, whether that's short-term flips or longer-term holds like multifamilies, like what we do, and we have a project, then part of the process of us getting to know that investor is to understand where their risk tolerance is, where their time horizons are, and a whole bunch of other things. And if the project fits, then we present it to them. If it doesn't fit, then we certainly are marketing it, but it's not something that I pick up the phone and say, "Hey Jay, I've got a deal that you really need to take a look at." I'm never trying to push a square peg into a round hole. So that's one thing. So, and really the reason being is that I want them to know that when I pick up the phone and I call them, it's a deal that fits with their model, what they're looking to do. It's not just I'm praying and spraying out information and hoping that that I hit the mark. So that's one. The other thing is, in a lot of cases, projects that we have aren't necessarily a fit for everybody in our contact database, investor database. And so as I'm working with those individual people, and we probably have, I think it's about a little more than 50 people here as well. If I come across a project that's a better fit for them, whether I benefit or not, I'm sharing that. If I trust the operator or I trust the capital raiser, and there is a deal that is a really good fit for somebody in our world, I am more than happy to make an introduction. And so I think that they appreciate that. The last part of it is I'm a cheap date. And so what I mean by that is I get the question once or twice a week of, because a lot of the folks that we work with are business owners and executives, right? And I get a question once or twice a week: why can't I do this? And my answer is, you can, and I'll gladly teach you everything I know over a cup of coffee or dinner, and I'll ask your questions. I'll tell you exactly what has to happen. I'm happy to share my playbooks. I'm happy to share all my documents. And they ask, why would you do that? I said, because I'm 12 years ahead of you. You're never going to catch me. And even if you did, it's a big, big pie out there. It's a big world. And I'm working on getting my slice. And if you get a slice, I'm happy for you, right? I don't view you as competition. I view you as a potential partner. And so I think they appreciate that, because I genuinely want them to succeed. And if I can help them succeed, great. If a friend or colleague with another deal can help them, all the better. That's fine.
Well, what you just shared, Ed, is you've got a mindset of abundance.
I do.
And not a mindset of scarcity,
Yeah.
right? There's plenty to go around, and people that have a mindset of scarcity, unfortunately, view themselves as victims instead of the person with the mindset of abundance. And there's plenty for everybody. And if I can help, you grow and you improve, then what goes around comes around. And so I appreciate you sharing that. Now, I know one of your areas of expertise is crowdfunding. And that's always, an interesting topic because a lot of people have heard the phrase, they've heard the word crowdfunding, but they really don't know what it is or really how you can use it to raise capital and how it works. So
Right.
talk about crowdfunding a little bit.
So I haven't necessarily used explicitly, the general crowdfunding platforms, but what I have done is, so I don't come from money, right? I did not start life on third base. And so what that means is that my relatives and friends are not stockbrokers and captains of industry. They are electricians and plumbers and general contractors and folks that work really hard for their money. And so one of the things that I recognized early on was, in my capital raising, that is, it actually took me quite a bit of time to finally decide to raise money outside of what we were doing. The whole idea here is that we would set these deals up as basically a 506B, which allows me to source funds from folks that are sophisticated but not necessarily accredited investors. And so that would allow me to sit with my brother-in-law or my uncle or somebody else and have a conversation around, okay, here is the basics of what we're looking to do from a real estate investing perspective. I'm going to teach you how to invest in real estate. And then I'm going to teach you how the project that we have here is basically going to help you and us advance our, towards our goals. And so in those 506B type scenarios, you can have up to 35 investors. So it allowed me to, as we were acquiring these, really good, well, they were beat up properties, but had really good opportunities for growth, both from a cash flow perspective and from an appreciation point of view. And so it allowed me to cut my friends and family in on these projects over the course of time. And so they were able to, instead of making, 4, 6, 8% in the stock market, they were making, 12, 16, 20 plus percent on the projects that we were working on. And so it made Christmas and Thanksgiving a whole lot of fun because we were able to help a whole lot of people. But so over the course of time, a chunk of the investors who we've worked with have come from that 506B pool. And, the rest of them have been, like I said before, business owners and technology executives and medical professionals and so on.
Sure. Now, you are the founder of Clark Street Capital. Talk about what is Clark Street Capital, what does it do, and how does it benefit others?
So we are primarily focused on helping executives and business owners break free from their W-2 jobs if they want to. I tell people that you can invest in real estate, but you don't have to be the landlord, right? If you work with a team like mine, to be able to, that is able to find a deal, acquire the deal, stabilize, rehab and stabilize a deal, and then ultimately manage it over the course of 3 to maybe 7 years, depending on the type of project, you're able to, see really strong returns, mid to high teens returns, as well as, the opportunity to double your equity in a particular project. And so, part of the conversation is around the power of compounding and how that works. But really our focus is on that for people like me, right? That, the person I was in 2017, I'm now serving that person and helping them grow. Either in a lot of cases, it's their retirement, but in some cases it's helping them build a portfolio through our projects that will enable them to ultimately leave their jobs and go have fun and get some time freedom and spend time with family or start their own gig or, whatever they want to do.
So does Clark Street Capital, as of now, have any opportunities for new investors to come on with you to get those 12% and 16% and 20% returns over time?
So yes, as a matter of fact, we do. Thank you for asking. So we just launched a debt fund, and that is a little bit different in that we are. I liken it to John Sutter and the 49ers, right? So John Sutter was the gentleman who realized that there was as much or more money in selling picks and axes than actually digging for the gold back in the mid 1850 and 40s and 50s. And so the debt fund that we've created, the Capital Preservation Fund, is designed specifically to fund other investors' projects. And so what we have is a group of about 45 or so flippers, rehabbers, and small multifamily investors that me and my partner Mike Meyer have built relationships with over the last 10, 12, 15 years. And with Mike, it's more than 20. And we are funding those deals. And so in that case, the returns, it's basically an arbitrage play. So we are taking money in from investors, depending on the level of the investment, ranges from 8 to 10% returns. And then we are loaning that out at 12% with a couple of points up front. And over the course of 6 to 12 months, we're turning that money, at least every 6 months is the goal, is to turn that money. It's ballpark that. And, so that's one project that we're working on. We're also developing a 100-unit development here in central Connecticut that we are in the middle of entitling as we speak. And by entitling, I mean surveys and permits and all that fun stuff, plot plans and whatnot. And so once we have that completed, which I expect sometime probably in the next 2 or 3 weeks, we'll be going to the market to start to raise money for that project. And it's an affordable housing play here in Connecticut because, one of the things that I'm passionate about is the recognition that there are, everywhere, but here in Connecticut in particular, we're about 30,000 units, affordable units behind where we need to be in 2030. And that presents a tremendous opportunity for developers, from a market perspective, and also in some cases in a public-private scenario where we're working with the state to through tax advantages and as well as some grants to be able to cost effectively build apartment buildings that about 30% of the units are allocated towards workmen's housing, which is something near and dear to my heart because I grew up in those houses. So in that housing, so it's something that we see as a tremendous opportunity going forward.
Well, Ed, that sounds exciting. More than one opportunity that you have right now that people can invest in and get high rates of return safely and securely. So what is the best way for them to reach out to you and Clark Street Capital?
The best way is ed@clarkst.com. That's my email. You can also go to our website and check out our projects and what we've done over the course of time. And that's clarkst.com. And we're everywhere on Facebook as Clark Street Capital, Facebook and Instagram and LinkedIn and now TikTok and YouTube and everywhere. So happy, like I said before, I'm a cheap date. I'm happy to have a cup of coffee with pretty much anybody that picks up the phone and asks for time. And that can either be a virtual if we're not close, or if you're somewhere in the Northeast, I'm happy to meet you halfway and grab a cup of coffee, and I'll even buy the coffee.
That sounds great, Ed. Ed, thank you so much for joining me. Again, his website is www.clarkst.com. And of course, as he says, he's all over social media. Ed, thank you for joining me, and God bless you.
It's a pleasure, Jay. Good to see you, my friend, and happy Thanksgiving, which is
all right. Same back to you. There you have it, another amazing episode of Raising Private Money. I'm Jay Conner, the Private Money Authority, and I really appreciate whatever platform you're listening on. They're on Spotify, iTunes, whatever it may be. Be sure to follow me so you don't miss out on upcoming episodes. Be sure and rate and review as well. And if you happen to be watching on YouTube, be sure to subscribe, like, and share, and click that bell so you don't miss out on the next upcoming amazing episode of Raising Private Money. I look forward to seeing you right here on the next episode of Raising Private Money.
Are you feeling inspired by the knowledge you gained in this episode? Then head over to jconner.com/moneyguide. That's jconner.com/moneyguide and download your free guide that shares 7 reasons why private money will skyrocket your real estate investing business right now. Again, that's jconner.com/moneyguide to get your free guide. We'll see you next time on Raising Private Money with Jay Conner.